Making the move from Canada to the US? We have 10 things for you to consider. Then we clear up the confusion between a mutual fund and an ETF. And can you do well by investing in real estate? All this and more right now on The Wealthy Life. Welcome to The Wealthy Life. Are you thinking about moving from Canada to the US? Stephen Marcus, CEO of Raymond James USA Limited, is here today to share 10 things to consider before making the move. Stephen, welcome to the show.
Thank you for having me. Excited to be here.
So what are the reasons people move from Canada to the US? Don't they know they live in paradise?
Yeah, it is paradise here. There are a number of reasons you would move. Typically what I see are work now that we work in a global type of environment. Companies are bringing people from all over the place, especially Canada, into the States. So you see a lot of people relocating for work, bigger opportunity down in the United States that they go down for. Personal reasons, you're meeting a significant other will bring you down into the States.
Love is always a problem,
always
isn't
a
it?
problem, yeah. And schooling. A lot of the younger generation are going to school in the States. They like where they're going to school. They want to stay down in the United States.
Okay, my son is going to school in the States, but I don't want him to fall in love with it. I want him to come home.
Come back. We all want our kids to come back home, but unfortunately, sometimes they stay.
So what are some of the complications involved in moving? Like, what are all the things people need to think about when moving to a different country?
So moving to a different country to the United States is a big deal. So financially, there's a lot of things you need to think about. Setting up a new bank account in the States, trying to establish credit for yourself in the States, trying to get US-centric credit cards in the States. And then one of the biggest ones you need to think about is partnering up with a cross-border financial advisor so you can find out what all those pitfalls are and all the things you need to think about before you make that move into the States and getting prepared prior to going.
Well, I think about things as simple as driving your car across. Do you need different insurance? And buying a house, you mentioned credit. What if you need a mortgage in the United States?
Right.
Can you even get one?
No, because you can't rely on your Canadian credits. You need to establish new credit once you're in the United States. And then again, with the border, being able to officially land in the United States, that one-time exemption of bringing all your assets in tax-free, things like that you need to think about before you move in.
And it's not as easy as, hey, I would like to live in Southern California. I'm going to move there. They don't just let anybody in, do they?
No, it's hard. You'd have to speak with an immigration attorney to figure out how to get a green card to become a permanent resident in the United States legally, be able to work in the United States. You need all these documentations, again, before you enter the United States.
Okay, so you can't just go on a whim. And those are quite a few steps and lots of things to consider before moving. Let's talk about the investment side of things. So for the average Canadian who maybe has certain investment accounts here, what happens to those?
So, and again, going back to being prepared and talking to a cross-border advisor on which accounts you can bring into the States and which you cannot.
Oh, so you can't bring them all.
You cannot bring them all. So let's talk tax-free savings accounts. TFSAs, a lot of Canadians have them. Great vehicle for Canadians. Things grow tax-free inside that account. But once that moves into the United States and now you are subjected to the IRS and you're filing taxes in the United States, they don't look at it the same. The IRS will look at it as a trust and they'll tax you on that growth inside that TFSA.
Wow, so the TFSA still stays in Canada if you want, but all the tax benefits are lost while you're living in the United States.
Correct.
Because the IRS is going to start taxing you.
That's correct. And they look at RESPs, the Education Savings Plan, exactly the same as they look at the TFSA. So when preparing, these are things that you may want to collapse before you're subjected to a U.S. tax regulator in the IRS.
Okay, but there may be tax consequences on the RESP if you collapse it too soon.
Correct.
So you've got to be mindful of that.
Again.
And the investments. So if people have the TFSA and RESP or a retirement account in Canada, and they hold mutual funds and things like that in their portfolio, but now they live in the US. Does that create a problem?
It does create a problem. So you would need to figure out what investments you hold prior. If you have Canadian mutual funds, you can't bring those in, transfer them to a US broker dealer. They cannot hold them. And certain Canadian products can't transfer either. So again, getting prepared before you move is key to make sure you have everything in line, because once you get offside, once you're in the United States, it can become costly in filing the additional forms with the IRS to get back on side.
Well, no one wants to file extra paperwork and pay extra taxes and have extra headaches. I think most people struggle just filing one tax return in Canada every year.
That's right.
Let alone having to deal with the IRS too. Okay, so then you need to meet with an expert for sure. Where can people go to find someone who can manage this for them?
Yeah, so if you go to Raymond James's website, we have a tool on there to locate a cross-border financial advisor, and you can speak to someone and at least have that peace of mind of knowing you have everything in place prior to going, before you make that move. And then once you do make the move, you then could potentially be partnered with that cross-border financial advisor to help you and guide you through all the steps.
So what's different between a cross-border advisor and just an advisor in either Canada or the US?
So a cross-border advisor is licensed to deal with people in the US and Canada. They have the proficiencies to know all the regulations inside the United States alongside Canada as well. So partnering with somebody who's cross-border can help you on both sides of the border, what tax implications, financial implications there are, depending on where you're moving to.
So don't try this on your own at home. Steve, thank you so much for being with us today. Great information.
Thanks for having me.
And up next, learn the difference between mutual funds and ETFs.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Welcome back. Do you know what the difference is between a mutual fund and an ETF? Joining us today is portfolio manager Spencer Barnes to explain the difference and why it matters. Spencer, welcome to the show.
Thanks, Sybil. It's great to be here with you today.
You know, we do a great job as an industry of throwing out all kinds of funny names and acronyms that most people don't even know what it really means. So let's rewind and get back to the basics. What is a mutual fund?
A mutual fund, in its simplest terms, is a portfolio of stocks and bonds that's professionally managed by different investment professionals.
Now, what would an ETF be? What does ETF stand for?
So an ETF is actually essentially the same thing, but what ETF stands for is exchange traded fund. So it's the same underlying fund, but it's traded throughout the day on a stock exchange, much like a stock or a bond would be.
So why would investors be interested in investing in mutual funds and ETFs as opposed to picking individual stocks?
Well, the biggest benefit of mutual funds and ETFs is instant diversification. When you buy that basket of securities, it's one of the principal tenets of investing. You diversify your risk when you have more than one holding in your portfolio. Mutual funds and ETFs provide a very cost-effective and efficient way to gain access to not only great portfolio managers, but a diversified basket of securities.
Yeah, I think about the average investor maybe starting out or with a smaller net worth, a smaller lump of money. And it might be $5,000, $50,000, or even $100,000. And maybe that's not enough to go out and buy a well-diversified portfolio of individual stocks. So what you're saying is a mutual fund or an ETF is a great way to diversify your portfolio, especially with smaller amounts.
Absolutely. I think one of the best examples for index-based ETFs, for example, is the Canadian Bond Index. There's over 1,300 different individual bonds contained in that index. For an individual investor to go out and try to replicate that themselves would take hundreds of millions of dollars, and it frankly would be almost impossible to do. But based on the ETFs that trade in Canada, you can buy that, and you can buy it for fractions of a percent in terms of overall cost. It'll cost you next to nothing, and you can buy almost 1,000 bonds. It's a fantastic tool for individuals' portfolios.
But there's so many to choose from. How many different mutual funds are available in Canada?
So in Canada, there's over 6,500 unique mutual fund strategies. If you were to look at the series, we're getting into 20, 30,000 different ones. It's a very big universe out there.
Wow. So that's a little bit overwhelming. How does an investor decide which one's right for them?
The best way to start it, and it is overwhelming. It can be overwhelming for myself, and I can only imagine what it is for other folks as well.
And you do this for a living full time.
And it never stops. There's new products every day. There's new funds. There's new ETFs every day. The easiest way to start tackling this is to look at what are your long-term objectives and what's the time frame for those. And then also what your individual goals are. Do you have some short-term goals? Do you have some long-term goals? Once you lay the framework for yourself in terms of, okay, I know that my long-term goal is capital appreciation over the next 15 to 20 years, it becomes a lot easier to start selecting the individual components that might work well to help you get to that goal, to help you achieve that objective.
Yeah, and Spencer, we talked on another segment about the importance of asset allocation and where you allocate your money. That's a good first step, which will then help you pick the right mutual funds or ETFs to fill in those gaps.
It's an absolutely key first step.
Yes, and differences again between the two. How does the fee structure work?
So the fee structure, it's something we chat about all the time to folks, and it's one of the larger misconceptions that fees determine everything, that lower cost is better. And while I was thinking about this, one of the best examples I've kind of come up with in saying, is cheaper better? If you were to build your dream home, would you want to build it with the cheapest materials possible? Would you want to look for the cheapest contractors possible? I think most would answer and say, no, that doesn't sound right. Well, in investing, it's very similar. There's really good uses for low cost ETFs to go in there and low cost mutual funds, for example. But there is a time and a place for each. And that's where having those clearly defined goals is just so critically important. And one thing I'd be remiss if I didn't say is fees are all net in mutual funds and ETFs. And what that means is that what you see from the returns of a mutual fund or an ETF is what you would get. It's what you receive.
After fees.
After fees. Everything is done after fees. That's the great part of the structure. So what you see is what you get. If that portfolio manager has done a good job achieving their objectives, they've done so well getting paid that fee. And you know you can look at that and compare it apples to other managers.
Well, that's great. So what you're saying is don't base decisions on fees alone. Look at the after fee returns. And I'm thinking also the volatility. You don't want too many ups and downs along the way. Spencer, thank you for helping us understand the differences between mutual funds and ETFs. It's been great having you.
It's been great to be here. Thanks so much, Sybil.
And up next, learn why you need a will and how to get one.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Welcome back. So many things can go wrong without an updated will, yet 50% of Canadians don't even have one. Joining us today is family and estate lawyer Andrew Tomlinson to show us how to get a will done and what to include. Andrew, welcome to the show.
Hi, Sybil.
So, why do people need a will in the first place?
A will is important for making sure that the people you care about are looked after in case something happens to you. When you're younger, a will is an insurance policy. If you're young and healthy, you don't know when something might go wrong, but if you've got a will, you've hopefully appointed guardians for your children in case something happens to you. You've explained who you want to be administering your will, and you've decided how you want your property to be distributed. As you get older, the will is less like an insurance policy and more like you're planning for what will happen after you've passed away.
Yeah, and what happens if people don't have a will? What kind of complications can that cause?
If you die without a will, then provincial legislation will determine how your assets get divided.
You mean someone else is going to make choices for me?
Yes.
Well, I don't like that.
No. Your assets might end up going to a family member that you're not too fond of. Your family may be in conflict over who gets what, depending on the total value of your estate. The The distribution will depend in part on what kind of family situation you have, whether you have children, whether you have a spouse, whether your spouse is related to your children, can all affect who gets what.
And blended families, like maybe it's a second or third spouse and you've got stepkids and all kinds of family dynamics going on.
Yes.
Without a will, your money, your assets may end up in the hands of people you didn't intend it to be with. What kind of conflict does that create for the survivors, the beneficiaries?
I've seen so many families where there was a simmering cooperation as long as the common family member was alive.
Yeah.
And then when that person's gone, it erupts into court conflict where they're applying in court for different orders and
They're just fighting.
fighting.
They
Yes.
just don't like it. So do you see in some cases where brothers and sisters don't even talk to each other ever again?
Yes, that's quite common in a lot of families.
Okay, and that can be avoided if a will was done in advance?
If you've set down your intentions and it's in a valid will, your loved ones are less likely to come into conflict with each other after you've gone because you've made your intentions clear.
And hopefully you share your intentions even before you're gone, just to smooth it out even a little bit further. Let's talk about the components of a will. How do you write one? What needs to be in there?
So when you write a will, you need to think of your executor. This is the person who's going to be in charge of carrying out your instructions in the will. Your executor should be someone who's responsible with money, who's good at communicating with banks and with beneficiaries in your will, and who can sell your real estate for the best price possible.
So they need to be organized and dependable, fair. And it sounds like a lot of work. Who wants that job?
It can be a thankless job. In some cases, an executor can take a fee, but otherwise you're looking for someone who's very trustworthy.
Okay, and if you can't find someone, what if you don't have a friend or a family member that is willing to take on that role or is suitable to take on that role? What do you do?
There are some places you can go to hire a professional executor. A professional executor could be someone at a lawyer, or it could be someone through a financial institution.
Like a trust company.
Like a trust company, but they will charge fees. Many people prefer to appoint a close family member because they might not charge fees.
Well, that's not really fair if you ask me, because I think if you're the executor doing all the work and then you're just splitting the estate between you and a couple other siblings, I think the executor should get paid.
And they are entitled to get paid. It's up to them whether they take the fee.
Good. Okay, so you need to make sure you've got an executor. What else needs to be in the will?
You need to decide who a guardian for your children.
Okay, if you have dependent children, you need a guardian.
Yes.
What happens if you don't have one?
The government will become the guardian for your children. Your family will fight with each other over who should be the guardian, and they will have to bring a court application about appointing one of them as the guardian.
Okay, viewers, if any of you have dependent children and don't yet have a will, get a will done now. Okay, that's good advice.
And there's two kinds of guardians.
Yep.
One is the guardian who takes care of your child day to day, and the other is the person who holds your estate in trust for the child.
Okay, so after you're gone until they reach a certain age, that type of a scenario?
You might have someone in your life who's great with dealing with your child's day-to-day life, and you might have someone else who's a better choice for managing the money for the child until they're an adult.
So Andrew, one final question. How much does it cost to get a will done?
Between $500 to $2,000, depending on how complicated.
Depending on how complicated, and that's with a professional. What about doing it yourself?
Be careful because you get what you pay for.
Great advice. Andrew, thank you so much for being on the show today. And don't go away. Find out how to build wealth through investing in real estate when we return.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Welcome back. Thanks for your letters, emails, tweets, and messages. Today's question is from Ned. Dear Sybil, I see other people doing well by investing in real estate, and I want to know, how can I do the same? What do I need to know before getting started? Regards, Ned. Well, Ned, investing in real estate can be a great way to build wealth, but it's not for everyone. There's quite a few things to consider, and I'll go through those with you now. First of all, if you're investing as a rental property, do you want short-term renters or long-term renters? Short-term renters, like vacation rentals, can generate a lot higher income, but it's also a lot more work. You maybe need to hire a property manager and a cleaning crew to go in and clean between all the stays. And you'll probably spend more money on marketing the property. If you have a long-term renter, it's a little bit easier, lower maintenance along the way, but you're not off the hook. You still need to roll up your sleeves and be prepared to fix the leaky toilet or the hot water tank that is blown. And who's going to mow the lawn and pull out the weeds? These are some of the things you need to consider. From a financial perspective, you need to make sure you've got both a down payment and the cash flow needs to work. Is the income coming in on the rental property enough to cover all of your expenses? Or are you going to have to fund some of that cash flow yourself? It might be okay to fund a bit of the cash flow as long as the long-term growth on the investment still makes sense. We have a great investment property analyzer calculator on our website that may help you run the numbers to make sure it makes sense. And you want to look at the risk. Are you okay if that property goes unrented and no income is coming in for a certain period of time? Once you've had a look at all of those factors, you should be in good shape to make a decision. And that wraps up this edition of The Wealthy Life, helping you make smart financial decisions. Join the Wealthy Life Club and you'll gain access to everything you need to live your version of the wealthy life.